Oh, hi there. It's John from Barefoot Accounting here. Have you ever noticed if you put a plate of biscuits out, how they all kind of disappear? No one's hungry, but somehow there's a mass crazed chomp fest for no particular reason apart from they're there. That's all apart from the last one. And I'm not talking about the pink wafer abomination no one likes. We're talking about prime ginger nut. For some reason, that last one suddenly doesn't have so much allure, or everyone suddenly finds so much more willpower. It kind of indicates that there's something kind of going on in our heads here that might not quite make logical sense. Now, what does it have to do with finances? Let's hope it has something to do with finances, otherwise it's going to be a really random video. One way of looking at it is the same as we might view our cash when it comes into our business. So for example, you might look at your bank account, suddenly see a big invoice come in and it's like, hey, it's payday, we got lots of money, great. However, in the back of our minds, we know that actually we probably shouldn't be touching it. We've got to worry about our taxes, and 20% of it's probably VAT anyway. We know we're going to have some bills to come out. We might even owe someone some money, but somehow there's some part of our brain that goes, it's there, let's use it. And this seems to be almost hardwired for us. So there's not much we can do about that really, apart from manage it. This isn't helped by the way we maybe look at our business as well, because when we're setting up a business plan or something, we might say, well, what do we think our sales are? That's good. Then we might have a look at our expenses, and these are all things we think we need to spend. And if our expenses are more than our sales, we'll go, well, that's okay, I'll just cut back on these expenses. But what we're effectively doing is creating a kind of a wish list for things we could spend at a later date. So, we've got quite a few things against us. And it's not helpful because when we look at there's an accounting formula, which is basically your sales minus your expenses. The crumbs that are left are your profit. It all makes sense, except when you think about it, your profit is quite important. It's how you're going to pay yourself. It's how you're going to fund growth for your business. It's also, if you're kind of got a seasonal business, it's that buffer. Or even if you don't, what's going to happen if you have a bad month, say you're ill or something, it's that buffer to keep you going. So it's really worth keeping that in mind. Now, in his book, Mike Michalowicz, the book's called Profit First. I can't say the guy's name, but you don't need to say the guy's name to read his book. But he argues that the actual formula should be mixed around. So instead of sales minus expenses equal profit, you should have a look at your sales, take away your profit, and what's left is what you have available for expenses. Now, it'd be easy to write him off as being a complete pedant and saying, well, algebraically, they're exactly the same. What's a man talking about, let alone writing a whole book about this? But actually, if you go a bit deeper, algebra is logical. It makes sense. People, on the other hand, are anything but logical. I mean, look at me, I'm walking along the canal with my arm outstretched holding a camera, talking to a bit of plastic. That is ridiculous. And this is another problem, we'll come up with our business plans, we've got our logical head-on, we've got our spreadsheet, all's wonderful in the world, and then we try and carry out the plan with people, dealing with other people in the shape of customers. So that's something to bear in mind. Have a look at the profit, you've got your sales, take away your profit, and then there's your expenses. And it's really about cutting your cloth to focusing on that's all you've got left to run your business. And if you keep in mind that amount, try and think more of investing in your business. Think of it as that last biscuit. You don't really want to touch it. You want to really treat it as sacred. So what action plans could we have from this? I'd say there's two things. Try and think of your expenses as being limited to the bit that's left at the end to drive your business forward. How can you invest it to improve your efficiency and such like? And the other one is quite a simple one of create another bank account, like a reserve, to take some of the money out of, out of sight, out of mind. Because you know that if you've got a seasonal business, you're going to have a bit of problems, every now and then. I have heard that things do go wrong from time to time. You do know that you are going to have taxes due. I mean, this is one thing I hate about my job. If someone comes to you late in the day, you say, oh, here's your tax return, and they just don't have the money to pay it. It's horrible. So, don't let that happen to you. You try and think of siphoning away some of that money to pay the VAT bill, to pay big bills that's happening. Maybe to fund expansion. Maybe that you've had, like, the big job of the year come in. So rather than blowing all the cash at once, put it outside, drip feed it back in. Actually, in the book I mentioned, Profit First, the guy even talks about having about 5 even more business accounts. Oh, thanks, Paul. Talking about having 5 or more business accounts just so that you can almost partition your work. It's quite a clever way of forcing yourself to do financial management. Anyway, that's me. Hope that was helpful. Toodaloo.